Welcome back to the Deep Dive. Today we're jumping into the very specialized and high-margin world of medical technology. We're focusing our entire analysis on Hologic Inc. That's HOLX on the ticker. And if you're someone who tracks companies that have carved out these really dominant niches, built these formidable competitive moats, Hologic is one that should be on your radar.
It really should.
To give you the full picture, we've gone through a very detailed research report from Copposcope, and we've paired that with the company's recent Q3 fiscal 2025 earnings call.
Right. And our mission here is pretty straightforward. We want to give you a shortcut to understanding what truly drives this company. We're going to guide you through its core business, how it fends off just massive competitors.
Giants like Abbott and Siemens.
Exactly. And we'll look at its growth strategy and, importantly, the very real execution risks it's facing in a med tech landscape that is, it's just changing so rapidly.
Absolutely. We've got a lot of ground to cover. We'll start with the 4 pillars of their business, then drill into their competitive advantages and challenges. After that, we'll analyze their growth strategy, which is all about innovation.
And then we'll see how it's all playing out.
Exactly. We'll look at the latest Q3 results to see how they're executing right now and what you really need to be watching.
Let's do it.
Okay, so let's start where Hologic starts. Women's health. Fundamentally, they develop, manufacture, and supply these pretty sophisticated diagnostic products, imaging systems, surgical products, all aimed at improving care.
And they break this down into 4 main business groups.
Right.
And those groups, they really illustrate where the company is putting its capital and its R&D dollars. The first, and I'd say most critical, is diagnostics. This is their engine. It's largely powered by something called the Panther platform.
Panther. Okay, so think of this as...
What?
A piece of hardware.
Exactly. Think of it as a proprietary, fully automated molecular diagnostic system. It's built for high-throughput testing.
When you say high throughput, what are we testing for here? And how does that automation really build their moat?
It's all about women's health assays, primarily. So testing for HPV, chlamydia, gonorrhea, and more recently, they're expanding. The automation is key because it requires, almost no human intervention.
So for a lab running thousands of tests a day.
It's incredibly efficient. They also have the Panther Fusion side, which expands what the machine can even do.
Wait, tell me about that. I saw the term open access testing kits in the source material. What does that actually mean for a lab?
That is a fantastic and crucial strategic point. Open access basically allows labs to develop and run their own specialized tests on Hologic's machine.
Oh, so it's not a closed system.
Not at all. It means the platform isn't just locked into Hologic's menu. It becomes way more versatile, which attracts labs that need that flexibility, and it dramatically increases the utilization of the machines they've sold. It's a huge, huge reason for labs to stick with Panther.
I see. Okay. So that's diagnostics. What's the other major pillar?
That would be breast health. This is where their market dominance is, frankly, absolute. It's all about their 3D mammography systems, the Genius 3D, which really revolutionized breast screening.
And it's not just the machine, right? The source mentioned interventional breast solutions.
Yes, and this is crucial. Think of it as a continuum of care.
So after the initial detection, what happens?
Exactly. These are the procedures that come after. And they're high-margin accessories and tools, things like MagSeed and MagTrace.
And what do they do?
Essentially, they allow a surgeon to precisely mark the location of a tumor or a lymph node before the surgery. It's a necessary high-precision step, and it connects their imaging sales directly to the surgical outcome.
So they're selling the machine, the AI software to read the image, and the tools for the operating room. A full solution.
That's the idea.
Okay, what about the smaller segments?
The third is surgical. This is focused on minimally invasive gynecological procedures. The 2 big products here are MyoSure for hysteroscopic tissue removal.
Things like polyps or fibroids.
Right, benign tissue. And NovaSure, which is used for endometrial ablation. Both are fast, effective outpatient procedures.
And the last one?
Finally, you have Skeletal Health. This is mainly their bone densitometry systems, or DXA systems. And a quick strategic note here. Management announced they're discontinuing their low-margin Fluoroscan Mini C-arm.
So they're shedding a product line.
Yes, but this isn't a problem. It's actually a strategic cleanup. They're shedding a low-margin product to focus all their resources on the core high-margin pillars. It's a smart move.
Okay, that structure shows a very sharp focus. But in med tech, you're always fighting these massive diversified players. How defensible are these niches against, a GE or an Abbott?
That's the central question.
What sets Hologic apart? The Compuscope report really boiled this down to two key platforms that act as well as absolute moats. First is that breast health dominance.
Right.
Hologic was the first to get FDA approval for 3D mammography. That first mover advantage basically locked up over 80% of the U.S. market.
And that 80% market share isn't just about initial sales. It's about their colossal installed base. Every system they sell creates this long-term recurring revenue stream.
Service contracts, accessories.
Service contracts, replacement parts, software upgrades, year after year. It means competitors like Siemens are basically fighting for scraps for the remaining 20%. And they have to convince a hospital to abandon a workflow that's already successful.
And the second advantage is in diagnostics with the Panther platform. What makes those switching costs so high for a lab?
Well, it's not just the price tag on the machine. When a lab brings in Panther, they integrate it into their entire IT infrastructure. They train all their staff on that specific workflow. They might even reconfigure the physical lab space.
So pulling it out isn't simple.
Pulling that machine out to replace it with a rival like Abbott's Alinity is it's an enormous operational nightmare. It's not a procurement decision, it's a strategic one. The risk of disruption is just way too high for some minor cost savings.
Okay, so a sticky customer base.
Very sticky. And on top of that, you have strong financial discipline. Current management has been laser focused on deleveraging, on paying down debt. This gives them the flexibility to make smart tuck-in acquisitions like Endomag instead of just chasing growth for growth's sake.
But wait, doesn't that intense concentration on just two segments? Doesn't that make them extremely vulnerable if those markets shift? Where are the challenges coming from?
That is the central strategic vulnerability. You're right. First, you've got pricing pressure. As rivals like Abbott and Roche expand their own test menus, the risk of commoditization goes way up.
They have to keep proving Panther is better.
They have to constantly prove it to justify the premium. Then you have secular risks, especially in surgical screening.
Right, the screening guidelines has changed.
Correct. It's a profound long-term shift. Guidelines now recommend fewer, less frequent pap smears, often replaced with HPV testing. This directly hits a core historical revenue stream for them. And rivals like Becton Dickinson are fighting hard in that space, driving prices down.
And looking even further out, the source material flagged technology threats. I'm thinking about things like liquid biopsy.
Exactly. These are truly disruptive technologies. If a simple blood draw liquid biopsy can one day achieve the same accuracy as a mammogram or a cervical swab,
It changes everything.
it's a massive challenge to Hologic's traditional markets. They have to innovate faster than these next-gen technologies can mature.
So let's put this in context. If you compare HOLX to a giant like Siemens or GE Healthcare, what's the key takeaway for you?
The difference is focus versus breadth. Siemens and GE are department stores. They offer everything from MRIs to cardiology equipment. Hologic is a world-leading boutique. They just know breast health and molecular diagnostics better than anyone else.
And against their most direct competitor in diagnostics, Abbott.
Abbott's Alinity platform is a very powerful, direct competitor, no question. But Abbott's attention is spread out across cardiovascular, nutrition, so many other areas. Hologic's success comes from concentrating all its R&D firepower on women's health assays. They light in the niche because their focus is it's unwavering.
That focus must define their growth strategy then. Let's pivot to how they're planning to get back to that mid-single-digit organic growth.
Organically, the growth engine is diagnostics, and specifically the Panther platform. They're driving it in two ways: menu expansion and utilization.
Okay, what does menu expansion look like?
It means adding new tests. They're preparing to launch new IVD tests for things like GI and hospital-acquired infections. That's expected late fiscal 26 or early 27. This gets Panther out of just the women's health silo and into the broader hospital.
Expanding the total market for every machine sold.
Dramatically.
Now, on to breast health. How do you grow an 80% market share? You can't just sell more new machines into a saturated market. It has to be about upgrades, right?
Precisely. They are targeting their own massive installed base with really compelling reasons to upgrade. The whole strategy is to reignite the gantry replacement cycle.
The hospital's big equipment replacement cycle.
Right, that 5 to 7 year capital expenditure plan. And they're pushing two key innovations. First, the new Envision mammography platform.
And second, the AI.
And second, and this is arguably more strategic, is the software play. Genius AI Detection Pro. Management calls it an all-in-one AI assistant for the radiologist,
It says it can reduce reading time by up to 24%.
which is a strong selling point. But the real strategic insight here is that this AI integration locks the customer in even tighter. If the AI works best on a Hologic gantry,
Then switching to a competitor's machine becomes strategically irrational. You'd lose your whole AI workflow.
it's moat reinforcement through AI. Absolutely.
And we can't forget the recurring revenue from those interventional products, like MagSeed and the newly acquired Endomag solutions.
Right, that supports the whole continuum of care vision.
Yeah.
Once they're in on detection, they want to be in on localization and the eventual surgical solution. It's pure, high-margin ancillary revenue.
So their strategy feels very focused, very achievable compared to a giant like GE trying to integrate a massive acquisition. But it all comes with that immense concentration risk.
That is the elephant in the room. Failure to execute on a major new launch like Envision or that new AI software could erode their competitive edge so fast because they have nothing else to fall back on. Their whole growth story rests on these key innovations landing successfully.
And those secular headwinds aren't going away.
No. The global adoption of the HPV vaccine, which is great for public health, is a long-term commercial pressure on cervical screening volumes. That decline means their new assays, like the BVCV test, have to work even harder to make up the difference.
Geopolitics also came up in the Q3 call.
Yeah.
Their China business, I saw, dropped by more than 50% year over year.
It's down to less than $10 million in the quarter. It's become a very volatile and difficult market for them.
And on top of that, management noted reduced funding for HIV testing in Africa, which hits their diagnostics volume.
And all of this connects directly to the financial headwinds from tariffs. The U.S. tariffs on goods made in China are expected to be a significant hit.
How significant?
Well, they've done a great job mitigating the worst case, but they still expect tariffs to cost them $10 to $12 million per quarter, starting in fiscal 2026.
Wow. That's a direct hit to gross margins.
It is. It pressures their margins by nearly 100 basis points, and we do have to acknowledge their past M&A track record here. The sources mention some historical missteps, like with GenProbe and Cynosure.
So integration risk is real, even with smaller deals.
It's a necessary warning flag, but to synthesize the risk, I'd say while Hologic has high niche dependency, its streamlined portfolio is actually an advantage. Their risks are market-specific, but their execution path is much, much cleaner than their larger competitors.
Okay, so let's look at that execution. The most recent Q3 results, management called them a sign of progress. Total revenue was just over $1 billion at $1.024 billion.
Which handily exceeded their guidance. And non-GAAP EPS was strong at $1.08.
Management is clearly signaling confidence. They're talking about returning to mid-single-digit organic revenue growth in fiscal 26. They seem to believe that turbulence is behind them.
And if you break down the segments, you can see why. Diagnostics showed solid momentum. Organic growth, if you exclude the volatile COVID sales, was 2.9%. Molecular diagnostics grew 5.2%.
And the breakout star mentioned on the call was the BVCV assay.
Yes, and that's significant. That's the test for bacterial vaginosis and candida vaginitis, very common infections. Its success means Hologic isn't just relying on HPV volume anymore. They're successfully moving into high-volume, routine infection testing. Management said it's now their second largest assay.
That's strong proof of that menu expansion strategy working.
It really is.
What about breast health?
Revenue there declined year over year, but it improved sequentially, so the planned turnaround is starting to gain some traction. And crucially, interventional sales, the high-margin stuff, grew 6% organically, which management credited to a much more focused sales force.
And the acquisitions are performing well. Endomag contributed nearly $20 million in revenue in Q3.
And at a very healthy gross margin, I believe was the quote. It's already exceeding their deal model and will start contributing to organic growth in August.
Okay, a final check on tariffs. The worst-case estimate has been cut by about half.
Yeah, thanks to mitigation efforts. They only took a $1.4 million hit in Q3, but the $8 million expected in Q4 shows that financial impact is definitely ramping up.
All right, so let's wrap this up. For anyone tracking Hologic, what are the absolute highest importance items to watch?
Number one has to be regulatory and screening guideline changes. These are just unpredictable. A new guideline can boost or crater their business almost overnight.
Number two.
The pace of breast health recovery. We need to see sustained adoption of the new Envision system. That whole gantry replacement cycle has to accelerate.
And three, the competitive dynamics in molecular diagnostics. This is a high-stakes war.
Yeah.
Can they keep differentiating Panther to fend off Roche and Abbott?
Absolutely. And you have to watch the market acceptance of new products like Genius AI Detection Pro. And maybe more importantly, watch the speed at which next-gen tech like liquid biopsy becomes clinically accepted. That's the long-term displacement risk.
So what's the core conclusion here? Hologic is this highly specialized company with deeply defensible niches. They have the financial strength and the market dominance, but that same specialization means they have to execute perfectly.
They have to nail the new AI-driven innovation while navigating all these serious geopolitical and secular headwinds at the same time.
It's a lot to juggle.
It is. But what's fascinating is their financial flexibility, a net leverage ratio of only 0.6x. They have plenty of dry powder. So the key question for you, the listener, is this. Can management transition the breast health business from just relying on its dominant installed base to driving growth purely through high-margin innovation?
AI and interventional products.
AI and interventional products, can they do that faster than the secular and competitive headwinds materialize? That is the timeline they are racing against.
That transition from market dominance to pure innovation, that's the challenge that will define their next chapter. Thank you for joining us for this deep dive.
We hope this distillation helps you cut through some of the noise. Understanding how these highly specialized companies manage concentration risk is vital knowledge, and we encourage you to keep exploring.
We'll see you next time.
This content is produced by Compasscope.com. For more than 1,100 public listed companies, find detailed research reports, visual mind maps, earnings call analysis, and audio discussions on Compasscope.com.